unprecedented time for oil and gas. It's a challenging time for our industry today. We're going to go through a severe down cycle. I think if there's any positive right now, it's that, as the old saying goes, low oil prices cure low oil prices. And a number of our customers are shutting in their wells. So this is going to bring down production in the U.S. And that's what has to happen today. That we all know about the demand collapse that we've seen.
Right.
Production come down as well. And I think you're going to see production in the U.S. start to come down as the number of drilling rigs comes down, completion activity slows. But on top of that, we've got E&Ps that are shutting in wells.
You're a real expert in this. I read here you even got your bachelor's in petroleum engineering from Texas A&M way back when. The reason I mention all this is because could you explain to us a little bit about the process of shutting in wells? How expensive is it? How risky is it? And why are companies so reluctant to do this more quickly?
Well, there's a number of reasons, and all of our different E&P customers have different economics on how they make decisions on when to shut in wells. When you do shut in wells, you have to take a number of precautions, and it's preparing for the well's eventual restart. So, there's a number of technical things that have to happen just to be able to shut in a well. But we've had a number of our customers make that decision. I've got a few that have shut in all their wells. I've got some that are shutting in about half. But at the same time, I've got some that are continuing to produce because they have agreements with the pipelines, and their agreements allow them to continue to get takeaway.
Yeah, that's what we're trying to understand. Texas is out. We've spoken with the railroad commissioners quite a bit in the last couple of weeks about whether they would try to prorate production. They seem to be wanting to do something like that, but then saying, well, maybe they need to coordinate with other states. It's not clear whether they legally can. And then the American Petroleum Institute isn't even in favor of something like that. What would you like to see? Obviously, your company would benefit very much from a higher oil price. Would you like to see regulators try to throttle back production?
Well, that's a difficult question. As you mentioned, there's a number of different players in the E&P. You've got small independents. You've got the large majors that work around the world, and you've got different states in the U.S. I think it's actually very difficult to coordinate, especially for something that's happening so quickly in terms of the drop in global demand. Just trying to meet that by coordinating states would take a fair amount of time and probably not be as effective. It's just the overall economics that we're seeing right now.
Frankly, Texas oil production could go to zero and the oil price would barely recover. I mean, that's how big a demand hit we're talking about. Are you concerned that the industry in your company might lose market share longer term, or is this simply a question of survival right now?
In our particular case, and we posted our earnings this morning, and we posted a solid first quarter, unfortunately going into this down cycle. But the important part for us at Patterson-UTI Energy is we have strong liquidity. We have a good balance sheet. We don't carry a lot of debt. We're going to be one of the survivors in this cycle, and we have a history of going through these cycles and coming out stronger. We'll probably actually gain a little bit of share as the cycle gets to the bottom, but we'll typically come out stronger in these cycles because of our balance sheet.